All right, let's do one thing. Let's also talk about, since we're talking about this entire space, we have someone joining in now. Umesh Revankar, the Vice Chairman and Managing Director at Shriram Finance, is joining us. We also had a policy where there was a pause that the RBI did on rates. But the question that we're asking now is, the interest rates in any case have been on the rise. Has that had an impact on demand? Also, what is the expectation as we move along, given that there could be a recessionary situation across the globe? Mr. Revankar, good morning. First, I just want to ask you whether the rate hikes so far, the interest rate hikes, have hurt demand in any way. And given that, we have this double whammy of higher interest rates, higher inflation, and perhaps slower growth as well, all of that put together, do you think it could impact business in FY24?
Yeah, good morning. See, the way I read it is the consumption credit, which was under pressure, because what happens is home buyers, household buyers of white goods, and maybe even the vehicle buyers for personal use, they may think of postponing if the interest rate keeps going up. If there's indication that interest rate is going up, and being the floating rate, then there is an disincentive for them. And for the people who borrow for the credit business, I think it goes with the economic cycle. If the economic cycle is strong, if they feel good demand, then businessmen, they keep borrowing money. So credit growth is in two different directions we have to see. Consumption demand and business demand. So I feel business demand is quite good. The business is holding good, and I feel that's where even an increase in interest rate would not have really dampened the mood of borrowing. But however, the pause is really good, and hope if the inflation is under control, we should be able to see pause for a longer time.
This may also, Mr. Revankar, good morning, be an acknowledgement that growth is starting to look a little patchy, isn't it? I mean, although, to be fair, RBI's own assessment is only an upgrade, not a downgrade. Because, I mean, inflation is still far above what the target is, that 4% plus minus 2. And yet you have a pause. So the other shoe is growth. Do you think this is an acknowledgement there?
Yeah, definitely, yes. I think growth is slowing down a bit in certain segments, which I was highlighting is the home buyers were trying to postpone, and even vehicle buy, even though the year-on-year demand or the sales looks to be very impressive last year, but this year towards the end of that there was some kind of a slowdown being visible, especially in the announcement and enthusiasm from the manufacturer or even real estate developers. So I think that's where RBI's pause is good, so that consumer interest is kept at a higher level.
Hi, good morning, Mr. Revankar. Given all that you're saying, slowdown in select pockets, robust in other pockets, what kind of dispersals and AUM growth could you guide us for FY24? And also, I'm just looking at Chola, for example. You seem to be lagging them on the growth aspect. What's your take going ahead from here on?
See, the growth for us, we had indicated a guidance of 3 years, 15% CAGR. We will continue to grow at that rate. If the economy is growing a little faster, we may grow a little faster than that. Otherwise, we would like to maintain a 15% growth. I do not wish to compare with the other lenders, because every lender have their own niche segment to be serviced. And we are in our niche segment, and we are very comfortable with the segment and the growth rate, what we planned.
This 15% is AUM or dispersals?
AUM growth.
AUM growth. All right. And also, what is the outlook now, given that interest rates could be a pause, and as you said, hopefully inflation cools off. If that's the case, we don't see more rate hikes coming in there. Outlook on NIMs as well as credit cost for the coming year?
See, the credit cost has been under control for last 1.5 years, and we expect it to continue to remain at that level, because when the economy is good, when there is a good demand, and when there is a appreciation on the assets, especially on the vehicles and the property, then automatically the credit behavior, customer behavior becomes much better. So the credit cost per se will further improve, is what I believe. And as far as net interest margin is concerned, with this pause and inflation, if it is coming as per the RBI expectation, then the net interest margin also we should be able to hold. There was expectation that net interest margin may come under some pressure. But with this, I believe the net interest margin for a year is likely to remain at the present level. And that is a good news for us.
Okay. So you spoke about this 15% compounded growth. Just wanted to understand before we let you go, you service a lot of the two-wheeler clients as well. That's a segment that you cater to. And there's been a big slowdown, not just in the rural market, but in two-wheeler exports as well. Are you seeing a slowdown in that pocket for your in your folio as well?
Now, if you look at two-wheeler demand is mostly coming from the rural market and semi-urban market. The urban market demand for the two-wheeler has been slowed down for quite a long time. So the last 6 months data, if you look at, there has been consistent growth, except for 1 month. There has been consistent growth. So I believe the demand is slowly coming back. And it may not reach to the previous level, because world over, if you look at two-wheeler segment, do not to grow beyond a particular level, because once it reaches particular maturity, then it start slowing down. People prefer to move towards a better mode of transportation, like four-wheeler, or if there is a better public transportation in that. So it's a mobility solution, two-wheeler, and it has a particular demand. And I feel the demand in the last 6 months has been consistently good. So I believe that will continue to grow. We are increasing our market share in two-wheeler. So what is important is we are increasing, and I strongly believe we will keep growing in two-wheeler at around 20% year on year.
All right. Okay, Mr. Revankar, we'll leave it at that. Thanks a lot for joining in. So 20% growth in the two-wheeler space and 15% growth overall is what you're looking at. And you don't see any impact that higher interest rates has had on demand just yet.